So the big decision might come as soon as tomorrow. Now over to Mitali. Thank you very much, Mitali, for joining us this evening on ET Now. I'll come to the impact later, but explain why is this additional ICRR being done? What's the liquidity status, the deposits? We understand that the rollback of the 2,000 rupee note is not the only reason.
No, absolutely. It's not the rollback of the 2000 rupee notes. In fact, that's one of the smallest reasons, because if we look at, the quantum of the 2000 rupee notes, that's actually very less compared to the amount of cash that is in circulation. So there are a number of reasons why, we are seeing, there are some real economic factors which are driving this entire monetary outcome, because the liquidity increase in the system is driven by the buoyancy of the economy and the sort of big bang return in that sense of the Indian economy post COVID. India is emerging as one of the destinations globally, which is a safe place to park capital and a safe place to invest. And the production linked incentive schemes, which have tried to create incentives for manufacturing, for foreign direct investment in a number of areas, number of sectors, are attracting some amount of increase in FDI. So all these factors, combining on the real economy side, along with increased inflation coming up in the developed economies, is creating more and more investment conditions in India, and therefore it's driving up the liquidity demand and the supply of capital. And this, of course, then tends to overheat the economy. So in such a situation, to balance, the demand and supply considerations, having a incremental cash reserve ratio is one of the tools that a reserve bank in such a situation can use to balance the inflationary trends with the real economic situation that's coming in and the investment situations that are coming in. So this helps in balancing the monetary flows. So that's how we got here.
Right, Mitali. So this, you were saying that, of course, is coming out of the fact that big bang announcements have been, made by FDIs. In fact, Indian economy has performed rather well, and in fact, the government has also given a push through its schemes, especially production-linked initiative schemes. I want to ask you, it was expected that the ICRR, would be kept intact for a few weeks until the festive season, but now there's likelihood of this extension. Now, festive season, we have to understand that it's a big cash withdrawal period for consumers from banks. So what's the impact that you see in terms of loans, for banks and for credit offtake systems?
So I think the biggest impact is always definitely going to be on EMI and loan payments, because if your cash reserve ratio is kept a little bit high, then your lending capacity as a bank is lower, and as a result you have to charge higher interest rates for consumer loans. And in that case, of course, when the interest rates are a bit higher, then your EMIs, I mean, as a common consumer, the problem always comes to EMIs. So that's where the pinch happens to a common consumer in the EMI payments. But other than that, I do expect that in the festive season, banks will try to offer some discounts, and that will also give some relief to the EMI payments. But in terms of cash withdrawals on individuals, this has no impact at all, because that's your own cash that you're withdrawing from the bank. So that's what I expect.
It's, Mitali, so you right, so you're saying that EMIs could become expensive, could become costlier for consumers. But then this, of course, is a temporary solution that the RBI is looking at. Now, cash reserve is always negative for banks. In fact, this was also seen in the markets last time when the government announced that. After later on, there was some recovery. So what's the trajectory that you see for banking stocks and, of course, the markets going forward from here?
Most important problem that the banking sector, again, I always like to comment on the, sectoral challenges. And I really think that, we have to always dig deep down when we are looking at any sector. And in the banking sector today, even 2 years after all these banking crises that we saw, even today, NPAs continue to be one of the biggest threats. And that's where the banking sector really has to take a sectoral approach, and the RBI as a regulator of the banking sector has to take that sectoral approach and think about the safeguards that need to be introduced for minimizing NPAs, and looking at how the banking sector needs to become more inclusive. I do consultations with women entrepreneurs on a regular basis for the research at Nicore Associates, because we are always looking at how we can make finance accessible to women. And even today, getting a loan as a small woman entrepreneur is nearly impossible, despite having so many government schemes to that effect. So somewhere I think our banking sector needs to have a relook on how do they balance the risk and the return, and minimize NPAs. And for that, we have to relook at a lot of the safeguard systems. Only when that is possible, then we can have a more inclusive banking system, which at this point is more focused on growth and capitalization rather than serving the needs of a larger population. I think that's really where we have to make more of an effort.
Thanks, Mitali. So you say that's the big challenge that banks need to resolve in at least the immediate short term. And right, thank you very much for your perspectives on this big story that we're breaking right now here on ET Now. So the RBI may ask lenders to maintain additional cash reserves for a few more weeks. The decision might happen as soon as tomorrow, which is when also ET Now sources tell us that RBI officials are set to meet. This could have an impact on your EMIs as well. So watch out for that very, very crucial decision coming in tomorrow. That was Mitali joining us to share her perspective on this big story.